What's up, guys? Chimp here, and it's been about 2 months since I've last recorded a market update, but I thought, we're sort of at this pivotal time in the market, and now would be a good time to talk about, where I think we're at and some considerations, as a trader in terms of where I think we could be going and in terms of risks. And yeah, sorry if I sound tired, by the way, it's been a long day, but wanted to get this video out before I called it. Um, First, let's just start off with sort of a big picture landscape of where we're at. We went to 110 in December, um, November, December, January, and then we started to dump in February. We went to as low as 74K, and then now we've pumped, and we've been sort of sitting basically, besides for a wick, above 100K for about 2 months. So the question now is, well, what's going to happen here? So let's just sort of go down a checklist. I made a couple points on a list. I kind of want to talk about them one by one to give my overarching message. I guess the TLDR is, and I'll sort of give my rationale why, but I think that being bullish here is low risk reward, and I'm not 100% sure what direction the market's going to pick short time frame, but I know that, or I have a strong sense that being bullish here is your upside is limited, and you have quite a decent amount of downside if anything sort of reverses. So let me sort of just go down this checklist. First of all, let's just start with sentiment. Everyone likes to meme about counter indicators and all these people. Look, I can tell you that the people on my list that I view as questionable traders are not bullish here. Are bullish here. And overall, the sentiment seems very bullish. Like, I've seen maybe like one or two bears. Like, the bears that I see, like, I'm talking about people who have been pretty consistently bearish. Like, you have Capo, who's sort of been like permanently clowned on, even though he's been like pretty accurate, the past, I want to say like year. And you have Cole, obviously, who's been sort of much more bear biased at this point in the market. So for the most part, those are the two bears. Like, sometimes I'll see bulls sort of say like, "Hey, it's time to be a little bit more cautious," or "Hey, like, I think we can pull back a few $1,000s." But the sentiment's basically, you know, either be cautious to buy the dip or just be max bullish. So we've seen a lot of that. Second, and I mean, pick your favorite CT account. Like, most of these guys are bullish, right? I'm not saying like all these guys are counter indicators or anything. Far from that. Just saying like, this isn't the sentiment that you see at 80K when everyone's worried about tariffs and Liberation Day and stock market meltdown and global depression because of Trump. Like, it's actually quite the opposite. Second, like, no one's really expecting a pullback. Like, again, like I mentioned, I see posts where people say like, "Hey, we might pull back $5,000, we might pull back $3,000, like whatever." Um, but no one's really expecting a big pullback. And again, like, this is typically what happens in markets, like at tops and bottoms. When people think that like you need to buy a 3% dip, like that's typically the sign to be a little bit more cautious. Um, I'll give you a funny story. Like, at the FTX lows, you really have to zoom in now, but back then, people thought that this candle, and I'll highlight it, people thought this candle right here was a bull trap, and this was a short. Price went from 16.8 basically to 17.2, and people were calling it a bull trap. So like, you literally had people conditioned to short these micro pullbacks, and now you have people conditioned to buy like the micro dips, right? People conditioned to buy, hey, if it goes to 104, if it goes to 105, if it goes to 106, like seeing posts like, oh, 105 would be like the generational buy. Okay, like, and to me, when I see things like that, that's like a major caution sign. Not to say we're gonna go down, but again, just like major caution sign. Um, Again, I think that one thing, and I don't know how to predict the stock market, but I personally think that the risks of Bitcoin going down, like, let's say the stock market goes up, like, I think Bitcoin might go up a bit because of correlated flows and whatnot. But I think like if you have a situation where the stock market goes down for a few days or a week, like you could get massive ETF outflows, and the market might not be conditioned to absorb that level of selling. Again, like people are basically chasing their bids, right? Um, by the way, this is an aside, but I would really recommend everyone go read Howard Marks on Bubble Watch. It's a memo he put out a couple months ago. Like I think there's a lot of great points there. Um, so I think that like the beta from the Nasdaq going down would be significantly higher than the beta of when the Nasdaq goes up. And you overall, I would say like you don't have the same breadth of altcoin froth, but you still have like pockets of froth, right? Like, and again, some people might say hyperliquid isn't froth, but look, like you still have people leveraging up the as. You had like people leveraging up the as, like some of that leverage got wiped, but you still have pockets of it, right? Like you have Bonk, you have like Fartcoin, etc. It's still there. It's just like a bit more muted than it was. Uh, so I think that's dangerous. And lastly, like I'm gonna show a trader, right? This is trader Aguila, 2,000 BTC long, like 20x leverage. Like this is not the type of shit you see at the lows. Like to me, people view this guy and they're like, oh, like he might get hunted. Like I don't think it matters if he gets hunted or not. Like it's more of a symptom of the type of market that we're in. And so when I see something like this, I'm like, okay, like there's clearly a good amount of, and like James Wynn was another example of this, right? Like you don't see these sort of players show up at 81K and long the breakout. Like these are the types of players that show up and like are buying the top and like getting ready for the market to break out, and the market never breaks out. So like this is not, he's not the problem. He's like a symptom of the larger problem, in my opinion. Now, let me talk a little bit about like the counter arguments. And again, like I'm skipping a lot of stuff here. Like maybe I'll publish a second video at some point. And hey, if I'm wrong, I'll publish a video too. Uh, the counter arguments are look like we're consolidating near the highs, like everything kind of looks good, like we're trending higher, like we even had a stop run. Like in fact, we had two stop runs, trending higher, like looks like we're gonna break out. There's definitely that. And another argument you can make is like, look, like clearly the flows, the Nasdaq to BTC flows are somewhat correlated. So like as long as stocks are going up, like as long as that like bigger bubble's going on, right? Like you're gonna have demand for these treasury companies, you're gonna have demand for ETF, and so like flows could be strong. I think those are both reasonable bullish arguments. Now, like again, you can go and look at the numbers. By the way, let me pull up the Bitcoin flows. Like since April 18th, we've had about 15 billion in flows. We've had periods of outflows, right? Like Bitcoin dumped from 70K to 49K when we had like a billion or a billion and a half in outflows back last August, September. Like similarly, we dumped from 110 to 74. We didn't dump to 74 actually. We dumped to like 77. The last leg, like, didn't really have much outflows, but we had like 5 billion in outflows before. So like to me, when I see all these inflows come in, like I think some of this is vulnerable, which is why I think like if the Nasdaq dumps, like cumulatively we're at 50 billion. Like could it drop to 45? Like I don't see why not. Seems reasonable to me. So I think like these risks are basically asymmetric. Um, and like let's just think about the market, right? Like by the way, Bitcoin is now a $2 trillion asset. Like this is something to keep for everyone to keep in mind. This is now a $2 trillion asset. Like 1 billion in flows here, 2 billion in flows there. Like it's gonna move the price. Like 15 billion in flows clearly has moved the price, right? But this is like we've had two big periods of this, like 20 to 40 and 35 to 50. We could get a third burst. Let's say we get a third burst, right? Like this again, this is a over $2 trillion asset. Like let's say we get a burst, and like you can look at these treasury companies too, by the way. Like a lot of them are kind of slowing down. Like Sailor is more handicapped than he was before. When you look at like whether like he can't really hit the ATMs on the preferreds very much, and his premium is pretty low on MSTR, so he can't really hit the ATMs on MSTR too easily, and like he hasn't shown a desire to issue debt that much. I mean that could change, but he's a bit more limited. Like you have Metaplanet like buying, 1,000 or 2,000 a week. You have some of these other copycats buying, but for the most part, like clearly, like the biggest player is a bit handicapped, and so like the treasury buying's slowing down, and like yeah, you get another burst of ETF buying. You get a secondary like burst of like Saudi princes or whatever the hell buying. Like like what's your realistic upside? Again, like let's just say a lot of the supply sold, and let's say there's some sort of liquidity pocket. Like what are you gonna do? Push to 130, right? Like 135. So like, you think about it, like your upside's maybe 20% here. And like what's your downside? Like for some reason stocks start going down. For some reason something sneezes in the system. And again, you're down like 15, 20%. And if anything else sneezes, like you're down even more. So like to me, the upside's pretty capped, like maybe 20%, and like downside could easily be like 20%, 30%, like no problem. Um, one other thing I wanted to talk about, which is important, which is like this notion of fraud cycles, and it was very prevalent last cycle, and I don't think it's as prevalent now, but it's something to consider, which is fraud cycles off like always follow. I think this is something Chanos said, but they always follow like price going up, but with a lag. So like and to visualize this, let's look at like 2022. So 2022, you have price go to 65, dump. And the second leg up, like you had all this shadow leverage, you had all this crazy shit going. And so like this was like the quote unquote like shit behind the curtains that you don't see. And this is what was going on for a long period of time. And so ultimately, like, yeah, we went up, we chilled, but like when we started coming down, like all that shadow leverage was now underwater, like, and it ended up becoming actually a huge handicap on the market. And I'm a little concerned, not as much as 2021, but I am concerned that by going through this period of like going up, having an initial flush, and having like a second wave of quote unquote confidence, that the fraud cycle, that there might be a significant level of fraud, or I should say maybe moderate to significant level of fraud sort of underlying this, that no one really knows how to quantify. And I think if that's the case, like again, this is why I say like I think downside risks are more than people think, because like you don't know how a market looks if such fraud is sort of there under the hood and it sort of unwinds. So anyways, like these are just my thoughts. Could be wrong, could be right, who knows? But I just think that as a trader, your upside's a bit limited. Like maybe you catch the long and maybe you can scalp it, but like you're seeing people call for 200 and 500, and I think like if you do the math, for us to get to 200, you're gonna need like 100 billion plus in flows easily. And if all these treasuries are sort of handicapped now, like are you gonna get 100 billion from the ETFs? Like maybe, but it took over a year to get 50 billion in like sort of like Goldilocks economic times. Like if anything sort of sneezes, like you're looking at downside. And so just wanted to give my 2 cents, put my thoughts out there, and well, time will ultimately tell if I'm right or wrong. But this is one of those times where it's exceedingly hard to say what the price is going to do in the next 2 or 3 days. But when you look at like the risk reward, it's like clear that being long here there's definitely a lot of risk and the reward is limited. You could win, right? Like you could get the 20% reward, but you could also wake up down 15 or 20% one day, and the bidder's exhausted, and then maybe you consolidate a bit and dump another 20. Like that's also possible. So anyways, guys, until next time, take care.